CNBC TV18, celebrating 15 years of leadership.
Welcome back to Markets Today. It's one of those days when the markets showed verve. They continued the rally on Thursday, well into Friday, throughout the day, maintained a 1% lead. And the Nifty, which at one point seemed to be giving up the 8,000 hold this week, charged up and ended above that 8,200 mark. The mid-caps almost kept pace with the heavyweights. Well, let's get you some more opinion. In a CNBC TV18 exclusive, William Bowter, Citigroup's chief economist, says that India is back on the reform track and he expects it to clock 6% growth next year. Speaking on a range of global issues, Bowter also said that he expects the Fed will not hike rates until well into 2015. Let's hear a slice of that conversation.
India is back on the path of reform, and so the supply-side bottlenecks that have kept down India's growth from the levels it could aspire to, which is actually in double digits, if the necessary supply-side reforms, labor markets, FDI, infrastructure, if that are all implemented, I think we'll do it incrementally. And so the effect will not be as good as it could be, but it will definitely be better than it was. So we see growth next year in the 6% range. It's still more likely than not that the Fed will not increase rates for the first time until later in the year, well into the second half. What they effectively said yesterday was not before April, but that simply lops off the early tail. It doesn't say we're going to raise in April. It just says definitely not before. So I think that the Fed will wait till it sees the white in the eyes of inflation, till there are material signs of upward pressure on earnings growth in the labor market.
All right, let's move to the day's legislative action now. The government today tabled the mid-year economic review in the Lok Sabha. The review shows that the government expects FY15 GDP growth rate of around 5.5%. The other key highlight is that the government has admitted that tax growth has been weaker than expected. The government is also worried that the latest rupee strengthening could hurt exports. Ekta Batra now joins in with the details. Ekta, what are the other fine points you picked up?
Well, what came out from the midterm review was in line with what the economists were expecting. On growth in specific, the government has said that the FY15 GDP growth is seen at around 5.5%. Remember, this is lower than the optimistic range that they had come out with of around 5.4 to 5.9%, but is in line with what the RBI is working with as well. We came out in the December 2nd policy with an estimate of GDP to be around 5.5% in FY15. Overall, on fiscal deficit, the government has said that the fiscal deficit target of 4.1% is a major challenge, and tax growth is weaker than expected. Direct tax collection is up 5.7% up to November. Indirect tax collection is up 7.1% up to November. And that is pretty much in line with the economist's standpoint as well, that both direct and indirect taxes will be a challenge in terms of meeting that target which was set out for FY15. And overall, the 4.1% might just be a hit or miss this time round. On current account deficit, the government said that the current account deficit will remain close to 2%. That is in line with what the economists were working with. They too expect a figure of around 2% current account deficit for FY15. Overall, the government also pointed out that the latest rupee strengthening is expected to hurt some sectors' export prospects. In fact, the rupee has gained 6.4% this year versus all trading partner currencies. On inflation, they said that the inflationary pressures continue to moderate. Given RBI's estimate of 6% inflation by March, monetary policy is expected to be tight. Around the monetary policy statements, one of them also included interest rates expected to remain unchanged till March quarter end, but that needs to be put into context. And besides that, they also mentioned that India's challenges are mostly domestic and stalled projects need to be cleared expeditiously as well.
All right, Ekta, don't go away. Before you go, just give us a mood check from the brokerages. What are the stocks they're favoring?
Well, I'll start with CLSA on Biocon. They've reinitiated coverage with an underperform rating and a target price of 451 rupees. Capacity constraints to impact growth over the medium term, according to them. And the Syngene listing, however, is going to be a key news flow to watch for. Macquarie has written on Indian IT. This is post Accenture's numbers. They see Accenture results as a positive for the Indian IT sector. This is coming after last week's muted commentary by TCS. Increase in outlook and guidance beating results are positive for demand. Lastly, UBS has written on the financial space. LIC Housing Finance is their preferred pick. Their target price for LIC Housing Finance stands at 550 rupees. They've upgraded HDFC and Indiabulls Housing Finance to buy. Housing finance companies will be the biggest beneficiaries amongst NBFCs, according to them, and this is as cost of funds will fall faster than lending rates.
All right, Ekta, many thanks for that. Let's now move on to some stock-specific news. In the latest from SpiceJet, the airline has promised its pilots that their salaries will be paid by the 24th of December. The airline had delayed salaries for almost 15% of its employees this month as it is facing a cash crunch.
Monte Carlo shares made their debut on the stock exchanges today. However, the stock has been battered as the company listed at 584 rupees per share. That's 10% below the issue price of 645 rupees a share. This makes Monte Carlo the first company this year whose shares have dropped below the IPO price despite a good response to its offer.
And in the DLF versus SEBI hearing at the Special Appellate Tribunal, the realty major concluded its arguments today. DLF said that the market regulator order barring it from dealing in securities market and accessing the capital markets are two grave punishments. The Gurgaon-based realtors' lawyers added that SEBI's order has paralyzed DLF and brought it down to its knees.
And now let's go across to Varinder, who is waiting by with all the cues that he would watch out for next week.
Well, thank you so much. A lot of events to watch out for next week. F&O expiry will be the most important. And of course, it's Christmas. So, the markets will also be closed for one day, which will be important for most of us. Well, on Monday, watch out for two stocks which will react to news or the board meeting which happened on December 20th. 8K Mile Software. There's an allotment of securities board meeting on December 20th. So, watch out for any reaction coming on that. Arch System International will be important because, again, board meeting on December 20th to consider buyback. That will be important stock to watch out for. Autoline Industries, there's a board meeting on Monday to consider stake sale in the US arm. So, that stock could be important. Also, Lloyd Electric and JBF Industries, both the stocks, there's a board meeting on Monday itself to consider fundraising via various instruments, so watch out for that as well. Tuesday could be very important because Parliament session ends and that all-important insurance bill I think everyone is watching out for. Also, NTPC completing 40 years on Tuesday and they'll be considering a proposal for issuing bonus debentures. That is important. And also for the headline, the final verdict in Satyam case is expected on Tuesday, so watch out for that. And also for the coal block allocation, especially for JSPL, Hindalco and many other companies, government is likely to kickstart first phase of coal block auction on Tuesday, and the tender documents are likely to be put up on the website on the same day, so watch out for that. Important US GDP data will be released on Tuesday, so that's an important one. On Wednesday, important for BEL is that the court will be considering closure report in Tatra deal case, so that stock could react positively, so watch out for that. And Thursday, of course, is the F&O expiry, and which the markets are closed on Thursday. So Wednesday could be important day to watch out for that as well. Otherwise, Thursday, Friday, no major news. All important news are on Monday and Tuesday, so watch out for that.
All right, Varinder, thank you so much for that. Let's now, before we sign out, let's quickly hear out Chandan Taparia of Anand Rathi Securities with his top derivative ideas for next week.
Yes, DLF is making the build-up of short position. It is going down from last 5-6 trading session, making the lower top, lower bottom formation. We are observing fresh call writing at every higher strike like 135, 140, and that's why we are expecting this stock to go down towards 126, 125 levels. So here, better to trade with put or sell the stock, keep the stop loss of 139, 140 zone and trade for the downside target of 126. This stock is just consolidating and holding the gains even after the sharp decline in the price. Stock is making an attractive price pattern and looks strong to move towards 400 zone. Even after the market pressure, we have seen fresh built up of long position, also the delivery volume, which clearly indicates that stock is all set to move higher and in bull grip. That's why we are suggesting to trade long here. Keep the stop loss near to 378 and expect the upside target of 400.
All right. Those are Christmas gifts from Chandan Taparia too. With that, we'll wrap up this edition of Markets Today. Have a great weekend and shop and party. Christmas weekend, isn't it, Surabhi?
Absolutely. And a good way to end it as well. Thank you so much for watching.
CNBC TV 18, celebrating 15 years of leadership.